Welcome back to Tax to You, the Practical Tax channel, where we answer all of your tax-related questions. Today I'm going to be showing you how to complete the 22-23 self-assessment tax return if you need to report a capital gain. To do this, I'm going to cover a walkthrough of how to tailor your return, a demonstration of the entries that you'll need to make under the capital gain section, and I'll give you an explanation of the tax calculation for capital gains. So if a capital gain is your only income for the tax year, that should cover the entire return from start to finish. Before we do get into it though, don't forget to like the video and subscribe for more helpful tax content. Submit your questions in the comments below and we'll ensure to get them answered either in the form of a reply or possibly a dedicated video like this one. You can also find us using the link below because although our aim is always to educate our clients as much as possible and share this information with you, we understand that tax can be confusing, stressful, and time-consuming. That's where we can step in and help. Check out the thousands of reviews on Trustpilot from clients who trusted us to do just that. So, how do we tailor the return to declare a capital gain? Okay, so here I am. I'm logged into my Government Gateway account and you can see I'm under the Tailor Your Return section of the return. That's section 3 over here if you're looking at the right-hand toggle. From here, I just need to, first of all, set up the return in order to declare a capital gain. So the return automatically picks up only the capital gain section. I don't want to be giving information about employment income and self-employed income if I don't have it. So to do that, in our example, I'm only going to declare a capital gain. And I'm going to ignore all of the other sections. So the first question, were you an employee or agency worker in the year? I'll say no. If you do obviously have these types of income, you'll need to add them alongside the capital gain. But to keep the example very simple, we'll say no to these. Again, no to self-employment. Partnerships, I'll say no. A partnership is just 2 or more self-employed individuals working together. Typically that'll be under a partnership agreement, so that one won't apply. Any income from UK land or property, that's going to be your rental income or Airbnbs, that kind of thing will go under this section. If you received any foreign income, do you need the foreign section? Okay, so maybe if you worked abroad or you have investments abroad, you could have income from outside of the UK. And then at the bottom, this is going to be the question that relates to us, that relates to the capital gain section. And if you do need to complete this section, then you'll say yes here. And then I'll save and continue on to page 2. And on page 2, it's just going to be more questions trying to determine what types of income you had during the tax year. Again, we're looking at the 22-23 tax year now, but it's pretty much the same setup across each different tax year. Did you receive any interest? I'll say no, but that's going to be bank interest, building society, that kind of thing. If you have loans with people and they're paying you interest on that loan, potentially it could fall under that section. Dividends, if you own shares in companies, in listed companies, or any companies for that matter. Did you receive any UK pension income? So pensions are taxable income as well, even though you're encouraged to save into a pension scheme, and they can be really tax efficient. When you do draw down money from a pension, a lot of that money will actually be taxable, especially when you're taking it as an annuity. Did you or your partner get child benefit? Again, we're saying no to all of these, but they ask about child benefit because if either you or your partner receive it and either of you are a higher earner, meaning more than £50,000 of income, then at that point they start to retract the child benefit. They take it back. And by the time you get to £60,000 of income, they've actually retracted it in full. So there's no financial benefit to having the child benefit if you earn or your partner earns more than £60,000. And that charge will always lie with the higher earner in that case. Did you incorrectly claim an amount of COVID support payment? I'll say no. It's becoming less likely as we move through tax years post-pandemic. That one's becoming less likely now, but you do have the option to declare that you incorrectly or falsely claimed it and you can pay that back. Did you receive any other UK income? So this is kind of wrapping up anything that hasn't been covered by the questions we mentioned already. Have you made any income tax losses? say no. These income tax losses, people get confused with these. These actually relate, usually if you follow the guidance, it will tell you that they normally relate to your other UK income. This isn't for self-employed individuals who have made a loss. This is a different question. Liable to pay pension savings tax charges. You normally have to pay these where you save too much into a pension scheme, either too much in a tax year, because you can only save up to your gross earnings, or £60,000, whichever is the lower figure normally. Or you could pay too much in overall, and you could have more than, I think it's 1.05 or 1.07 million in your pension pot. You may have to pay a tax charge on that as well. So it's for, again, higher earners, higher savers. Save and continue. And then the last page of tailoring your return, page 3. Did you make contributions towards a personal pension plan or retirement annuity? So personal pension plan is just one outside of your employment that you set up yourself. Quite often or occasionally there can be additional tax relief, usually for higher earners, that can be applied for through a tax return. So if you are a higher earner, higher rate taxpayer or additional rate taxpayer, it's important that you declare it on a tax return here that you've made those contributions to a personal pension plan, because you can get some money back. And similar situation for charitable contributions. If you give money to a registered charity and you're a higher or additional rate taxpayer, then there can be some additional tax savings by declaring it on here. If you or your spouse or civil partner were born before 1935, do you want to claim married couples allowance? You'd need to be more than 87, 88 years old for that one to apply. But the one below is more likely, transferring 10% of your personal allowance to your spouse or civil partner. That's usually good if one of you is a basic rate taxpayer and the other maybe doesn't earn or just crosses the threshold. Then by transferring some of your personal allowance to your spouse or civil partner, they can earn more money tax-free. So as a couple, you end up paying less tax. Do you want to claim other tax relief? So this, again, just a wrapping up question. You can see here details of investment tax relief, venture capital, trust shares, maintenance or alimony payments. It's going to be a bit rarer, that one. Have you had any 22-23 income tax refunded or offset by us or Job Centre Plus? I always get asked about this one if that includes universal credit. Universal credit does not go in here. It's not taxable income and it doesn't need declaring on a tax return. Did you have a tax advisor? If you have someone helping you with your tax calculations and you're paying for that service, you may want to give details here. Have you used one or more tax avoidance schemes? So a tax avoidance scheme normally comes with a reference number. HMRC are normally aware of it already, and you actually, if you're using it, you have to declare that reference number and that you're using it to HMRC here, and then they'll go and investigate and try and shut it down and try and get the money back from you normally as well. Are you acting in capacity on behalf of someone else? No, I'm completing my own tax return, but if you are, you can declare that here and then save and continue. Now, before we go any further, if that does seem like too much hassle or maybe you need some assistance with your tax return, don't forget to check us out at tax2u.co.uk. Our prices start from £50 plus VAT for a basic self-assessment tax return, which includes one of our accountants preparing and submitting your tax return to HMRC. You can book this via our website using the link below. Now, let's move on to completing the capital gains section of the tax return. Now that we've actually tailored the return for our circumstances, I can now complete the capital gains section. So from here, you can see I'm on section 4, fill in your return, and I can just scroll down. Anything entered in blue, where it says entered here, that means I've completed that section. And then just below, the sections that I've told them about, the income that I've told them I have, will be generated below. So in this case, I only said capital gains, but if I did have employment income, self-employed income, whatever it might be, those would all be populated here and you could work through them. So I'll start by clicking on the first link under the capital gains header, and then I'm going to be presented with a little bit of information about what I need to provide and how to complete it, and then a bunch of questions that I'll need to work through. So the first question is, did you dispose of chargeable assets worth more than £49,200? I'm going to say no. We'll do a basic example where my proceeds from sale are less than this. However, it's worth pointing out, If you click on the link below, you'll get a bit of additional information. But essentially, if you dispose of assets worth more than £49,200, then you'll normally need to complete the capital gains section anyway. And that's important because even though you've disposed of maybe a 50 grand asset, you may not have made any money on it. You may have broke even, you may have made a loss, but that is a trigger to complete this section anyway. So even if that's the case, if you haven't made any money, HMRC still want to know about larger disposals. So just bear that in mind here. Are losses deducted? Again, I'll say no. So typically in a tax year, you might dispose of some assets where you make a capital gain, you make some money, a profit on the disposal, you sold it for more than you purchased it for, and you might dispose of some assets where you make a loss, you sold it for less than you purchased it for. Typically, the rule is that any losses are offset against gains in the same period. Okay, so if you do have the two, you need to kind of combine them together, and you would tell HMRC, by the way, I've already deducted some losses in the current tax year. Again, in this example, I'll assume that I've only got capital gains in the year and I haven't made any disposals that resulted in a loss. And then the last question, are your taxable gains more than £12,300? £12,300, that is the threshold for capital gains, or that is the allowance for capital gains, tax-free allowance in the 22-23 tax year, which is one that I'm completing. In the following tax year, that will drop down to about £6,000. In the tax year after, down to about £3,000 again. So your capital gains tax allowance is really getting hit over the next couple of years. But that's why they're asking this question here. So I'll say yes, I've got gains of more than £12,300. If I say no, it's likely that I won't actually have to complete the capital gains section at all because there wouldn't be any trigger here. Okay, so I'll say yes, save and continue. And on to the next page. Again, a bit more information here. It's worth having a read through this as you're presented with each page. In particular, this section. So usually on a tax return, for lots of different income types, you can just provide the numbers. If you say, hey, I had self-employed income, 100,000 income, 50,000 expenses, my profit is 50 grand. HMRC are quite happy to take that as given. Unless you have an investigation, they don't really care about the backup behind the numbers. Capital gains, it doesn't really work like that. You need to provide a little bit more information. So you can see here, you must provide a computation for each disposal of an asset, which is not an exempt asset. So there's lots of exempt assets. So it could be your house, for example, your principal private residence, the one that you live in, is normally exempt from capital gains. Your car is normally exempt from capital gains. Any assets that you hold within an ISA, an individual savings account, are normally exempt as well. Anything else, or most other assets, are potentially chargeable assets. Okay, and that's what they're talking about here. You may be able to use our capital gains computation worksheet to help you calculate the gain or loss on the disposal of an asset, but it cannot be used in all circumstances. This is down here I'm reading. So if you scroll down, you can see, and again, you can look at the detailed guidance, but it gives you a good idea here. You can't use the working sheet if you got your asset by the exercise of an option. The disposal is a part disposal, and then you have to add together your gains or losses to find the total gain that you want to claim BADR on, business asset disposal relief. So what they're saying is they have a basic computation, a basic worksheet for very simple disposal of an asset. I bought this one asset, I sold it, over here I made this much money. That's very simple. If it's more complicated than that, I bought two of these assets, I then bought another one a year later, disposed of one of them, it's too complicated. You won't be able to use their computation anymore. So just bear that in mind. If you can't use their computation, then you'll need to provide something, an Excel document detailing exactly what's taken place in the transaction. And typically in the computation, you're going to have the dates of the transactions, when you purchased it, how much you purchased it for, if there were any cost involved with that purchase, if you then improved on the asset, maybe you bought a house and you did an extension on it. your disposal, when you actually got rid of it, the date, the amount you disposed of it for, and any cost involved with disposing. Those are all details that need to be provided in the calculation. Do you want to use the capital gains computation worksheet for your disposals? Again, if you've got your own worksheet, then you can attach that. I'm going to say yes. I'm going to put in a couple of very basic capital gains or disposals. So we'll use their computations. And then it's a case of putting in the details for each disposal. So in this case, your reference for this disposal, so I will go with some shares. Let's go with Tesla shares. And we can select a category from below. So these are listed shares and securities. You can find them listed on the NASDAQ, I think. So we'll select the most appropriate category. And then you can just provide a description of the asset and the number of shares, 100 shares in Tesla. That's what I dispose of. You don't need to go into great detail. But if it is a more obscure asset, maybe a painting, maybe an antique, that kind of thing, you can provide that detail here. The date of the disposal, so I'll go with a date within the tax year. So if we go with the 4th of the 7th, 2022, that will fall within the 22-23 tax year. And then the proceeds that we received for those shares. So I don't know what Tesla shares cost at the moment or are valued at. We'll put in sort of 25,000 for our 100 shares. Any costs on disposal. So typically this is a cost associated with disposing of your asset. So in this case with shares, it could be that I had to pay an agent a commission of £100 to get rid of those shares, to sell them. So that's an incidental cost on disposal, and it will bring my proceeds down to 24,900. We'll then need to provide a date of acquisition. So let's go with 2013. So we've held them for 10 years or nearly 10 years or so. And then cost or market value below. So the cost is quite easy. If I purchase them for, let's say, £2,000 back then, that's quite easy. If you're gifted an asset or you receive it by some other means, then sometimes you won't have a cost, in which case you'll normally need to use the market value at the date that you took ownership or you received them. Incidental costs and acquisition. So again, I might have had to pay maybe £50 to an agent to acquire those shares back then. And again, that will get deducted off my total or added on to my total cost. Improvement costs. So the best example for improvement costs, probably on a house. If you purchase a second house, Airbnb or a rental property, that kind of thing, that's normally a chargeable asset and falls under capital gains when you dispose of it. If you've done an extension on that house, potentially that's an improvement cost. Providing that extension is still in place at the time you come to dispose of the asset, then you may be able to include that here. With shares, it's very unlikely that you would actually have any. Deduction, if any, in respect of reliefs and elections. You can look at what reliefs and elections are available. These are just for the disposal of some shares that I hold, so there won't be any in this case. And then a description, if you are claiming any of those reliefs, you can provide a bit of detail below about why. So my total gain on that disposal is £22,850. I can then from here add another worksheet if I wish to, which I will do in this case, and work through another disposal. So in this case, I'll say I've disposed of a painting. That's a different asset type. So I'll look for a category that fits, probably other property. And then I can just provide a bit of a description as to what I've actually sold. So in this case, I'll just put it's an antique painting and frame. And then continue to enter the details of each transaction. So exactly as we did before, you want to provide the date of the disposal. So if we went with the 10th of the 10th, 2022, and let's say we dispose of it for £5,000, maybe we had to pay again a fee, £500 on sale. The date of acquisition, so we could go with the 1st of March 2020, whenever it might have been. The cost on acquisition, so I'll go with £3,000. So I've only made a small gain on this one. Any costs on acquisition, I'll say no. And then improvement costs, again, unlikely on this one. Just bear in mind, maintenance costs. Maintenance wouldn't count as an improvement cost. You need to actually be improving the asset, not just maintaining its current form. So you can see I've made 1,500 gain on this transaction. No reliefs, so no description at the bottom of those reliefs. And then I will save and continue. And then we're presented with the worksheet. So this details all of my disposals, all of my gains. I've got my listed shares in here with a total gain of 22,850. And then below that, I've got other property, which will be my painting. And I made a gain of £1,500 there. From here, you can then either confirm that you're happy. So I'll say, no, I'm happy to use these figures. Do you need to detail disposals or gains which have not been included in the worksheet above? If I'm happy that these are my only disposals, I'll say no. If maybe I had disposals which I can't use this worksheet for, remember you can't use it for everything, maybe it's too complicated, then I could say yes and then add in my own figures and computations as well. But I'm happy, so I'll save and continue. And then you can see this summary page here for the disposal of shares and securities, first of all. So again, you're just checking the details. Everything's pre-populated here. Disposal proceeds, 2,150 of costs, leaving me with a gain of 22,850. This is the entry that will go across to HMRC. There were no losses. Remember, I told them there are no losses that have been deducted. Any claims and elections, no. And then you'll do the same for your second disposal in this case. I'm happy with everything in here. So I'm confirming no claims or elections and then move on. This is a chance to make any adjustments or offset any losses. So we've got a total gain of 24,350 at the moment. Losses set against the 22-23 capital gain. So these are losses brought forward and unused, and used in the current year. So the thing with capital gains is, if you make a loss, providing you declare it to HMRC, you can just carry that loss forward indefinitely. If it takes 20 years, that's fine. When you eventually make a gain, you can offset that loss against current year gains. So if I was carrying forward a £5,000 loss, I can enter that in here and that will reduce my total gain down by £5,000. Income losses of 22-23 set against gains. So if you make an income tax loss, you can potentially offset that against the gains. It's not going to apply to this example, but you'll find all the details in the link below. And then at the bottom, losses available to carry forward. So with capital gains, it's an interesting one. So if you had, let's say, 20,000 of losses brought forward, you only have to reduce your total gain, this one up here, down to the current year allowance. So in 22-23, the allowance was £12,300. So if I had 20,000 of losses brought forward, I can use part of those losses to bring this down, this figure down to 12,300. So I'll do 24,350 less 12,300, and I would enter the difference in this box here. Anything that then remains, I can just carry forward. Now, the good thing about that is you're not overusing your losses. You're not having to use them and sacrifice your allowance as well. You can use both of them really effectively. So make sure you're doing that appropriately and you're making use of those losses. I'm going to leave 5,000 in there. So we would expect this gain to drop down to sort of £19,350. I'm not going to carry forward any more losses. We'll assume I only had 5,000 and I've used those in full here. Losses used against an earlier year's gain. So this one is going to be a little bit rare. So it actually tells you below special circumstances only. Again, you can look at the description here, but it's not going to apply to my situation. Gains qualifying for investors relief. So this is normally where you're investing in unlisted companies, smaller companies. Tesla is not an unlisted company, so I'm not going to qualify for that. Gains qualifying for BADR, business asset disposal relief. That normally applies to assets held within a business for a certain period of time or used within a business. Or if you're self-employed and you've built a business up, when you dispose of it, you can often claim BADR and get a reduced rate. It used to be called Entrepreneur's Relief, you can see down here. It won't apply to this situation. If you are claiming BADR, there's also a lifetime allowance, so you can only claim a certain amount in your lifetime, so you need to declare if you have claimed that previously. And then at the bottom, we've got adjustments to capital gains. These adjustments are going to be pretty rare, so I'm not going to put anything in here. Again, you can see below, additional liability for non-resident or dual resident trust. We're not a trust, so these are not going to apply. Do your computations include any estimates or valuations? I'll say no, I'm happy that these are final figures. You can use estimates or valuations, but if you do, HMRC are going to expect you to come back and correct this at some point because they want the final figures. You'll usually need to give details of why you're only using an estimate as well. Save and continue. This page, excluded index securities and qualifying asset holding company QAHC returns. So this is not going to apply to this situation. We're selling shares in Tesla. It's pretty straightforward, and a painting. We're not looking at index securities. You can go away and have a look at what these are. They're not going to apply to many people, and you can see this whole page relates to index securities and QAHC. So I'll save and continue, but I can just leave all of these blank. And then any other information. So this is known as white space. So you can enter any information in here that somebody reviewing your return may find useful, but only information that relates to your capital gains. So if I had income from employment and capital gains, I wouldn't provide any information about the employment in here. It's not going to be at the right place for it. You would do that under that section. So only about capital gains and only where it's useful. If you're declaring a very simple gain like I have here, they're not going to have any questions about it. It's really straightforward. So why give them a load of extra information that's going to flag up that they're going to need to then review? But if you know that there's something in your gain that someone's going to look at and think, well, that doesn't make sense, and you know it's going to be a question, you might want to explain away that question and answer it before they trigger an investigation. Okay, I'll leave it blank, save and continue. And now we're on to the usual questions that anybody completing a self-assessment tax return would have to complete. So we'll just fly through these. These don't actually relate to the capital gains section, but everyone will need to complete them. And here we're being asked about underpaid tax from earlier tax years. Is this figure correct? If it's 0, if there's no underpaid tax, then you'll just say yes. Similar question on the next page. Again, I'm happy that this is 0, so I'll save and continue. And again, outstanding debt included in your tax code. If it's 0, then you can enter 0 in this box here. If you have overpaid tax, then you can give details of your bank account or home address to get a check sent to you. In this case, I'll have a tax liability, so I'm going to leave that as not applicable. Save and continue. And then these next questions are where you're going to have a tax liability for this tax year that you're submitting, 22-23, or below that, 23-24, do you want that liability to be deducted from your tax code, adjusted in your tax code and collected through there? But you can only do it if your liability is below a certain threshold, £3,000 in this case. I'm saying no to both. I'm happy to pay the liability, and then I'll save and continue. Adjustments to tax due are going to be very, very rare, so I'm going to leave these blank. Save and continue. And then does your return contain provisional figures? So I'm happy these are final figures, and I'm going to save and continue. A bit more white space, but this is just general white space. So if you have anything related to your general self-assessment, then you can enter that here. And no attachments. Save and continue. And that is us finished with all the entries needed for the capital gains section of the tax return. Now, just remember what we've demonstrated here is how to report a basic capital gain. To get to this point, of course, you need to work through your asset disposals and calculate the gain or loss on each one. And of course, that in itself can be difficult. So if you want one of our agents to help you with the calculation, you can book via the link below. Now, let's look at the tax calculation. So I'm happy here that I've made all the entries needed, and now I want to look at how much tax is owing. I can do that by scrolling to the bottom of this page, just making sure that everything is marked as entered. If it isn't, then it's going to highlight on here that I need to return to a particular page or section. I can click on Next. And then this is a summary of what needs paying. So in this case, you can see here, the total amount due for the 22-23 tax year is £705. Now, anyone who completes a tax return may already know that typically, if this figure here is more than £1,000, then what HMRC will do, they'll ask you to start paying up front for the next tax year. So in that case, you normally pay, as well as paying that liability up here, you'll normally pay 50% again down here, and then a following 50%, a further 50% in July. So with capital gains, your income doesn't count towards those payments on account. So even if I had a tax liability of £10,000 here, they won't ask me to make payments on account just because of that, because they know a capital gain is a one-off event. You're not going to make a capital gain this year, next year, the following year, like you would with self-employment or employment income. So this won't actually count towards that payment on account threshold. And if you are wondering why it hasn't triggered, that's normally the reason why. So £705 payable by the 31st of January 2024. And if we want to know where that figure has come from, we can scroll down to the bottom and we can view and print your full calculation to get the full details. So in here, you can see at the top, we've got a personal allowance of £12,570. That won't apply in this situation unless I've got income from elsewhere. You cannot use your personal allowance against capital gains. It doesn't work like that. You have a separate capital gains allowance. So I'll scroll down. This is the income section. So if you have employment income, self-employed income, that kind of thing, you'll see it detailed here. And then below that, down here, you can see my capital gain being taxed. So they're taxing me on £7,050 of capital gains. Now that's because they've already deducted £12,300. Okay, remember I had £19,000 odd of capital gains. So my allowance has already been deducted, and then they're applying the appropriate tax rate. So this is going to depend on, first of all, your level of income. If you're a basic rate taxpayer or up to the end of the basic rate threshold, you're normally taxed at 10%. If you're a higher or additional rate taxpayer, it's normally 20%. But if you're disposing of certain assets, which is normally residential property, those rates are normally actually 18 for basic rate taxpayers or 28 for higher and additional rate taxpayers. So it depends on your level of income and what you're disposing of, but they will enter the correct tax rate based on the selection that you made back under the capital gains section. 10% of 7,050, £705. So it's a very straightforward calculation. And again, you can see at the bottom of the page that is due by the 31st of January 2024. After viewing this video, you should now be able to tailor your tax return so it's ready to report a capital gain. You should be able to complete the capital gains section of the self-assessment tax return, and you'll understand the tax calculation and how to view it. Don't forget, if you're having any trouble at Tax2You, we provide an easy-to-use self-assessment service and would be happy to help whatever your situation. Just follow the link below. That is all for today. Don't forget to check us out at tax2you.co.uk and subscribe to the channel for more helpful tax content. Thank you for watching. See you next time.